What if Trump's tax cuts do not get extended? What if they expire this year? What happens next year? We're gonna go over that today and who it affects the most and why maybe you should be concerned going forward on what this whole tax situation might look like if it does not pass through Congress this year. Again, my name is Costanzo, Costanzo Financial Advisors. We're over the tax impact here of kind of the average individual. If you make good money today, what does that effect happen to you next year when these tax cuts do expire? A couple of things. So first and foremost, we're in a marginal tax bracket, meaning every region that you hit, you'll see here the 10% bracket. Any dollar you make from $0 to $23,000 gets taxed at 10%. And if you make more money than that, all the dollars from $23,000 to $96,000, they get taxed at 12%. And so forth. Everyone's in the 10% bracket. You just might make more money, right? And if you make more money, right, that might get you to these higher limits where any dollar you make from 206 to 394, you're in the 24% tax bracket. Hopefully that makes sense, right? So we're marginal. So when you hit certain limits, only those dollars get taxed at that limit there. Now, a couple of things to kind of mention here. When we look through this here, a couple of things. First and foremost, how does this change? Because right now, these are current taxes today. Up to the 32% tax bracket, did not go further than that, all right? So we're going to cover up to 500 grand of income. So if you make $100,000, you are $4,000 over into the 22% tax bracket. Who does this affect the most? In my eyes, it affects those who really are making 150 all the way to 500K. You're going to get affected the most. The biggest tax increases are there. Now, if you make less than that, right, you still have tax increases, but not really as much. So here's what happens. If we get these tax cuts not going through and they go back to what they were in 2017, here is where the estimated rates would be based off inflation and what we're seeing today. The 10% still there goes to 18,000. It's a little bit less than what it was previously. Now the 12 becomes the 15 and it goes to $75,000. All right. Now if you notice here, before the 12 went to 96,000, it's lower. Right. So you make $90,000, you're in the 12% tax bracket today. Next year, you'll be in the 15, but you'll also get into the 25% tax bracket. So that's a 10% jump up, right, in terms of what you're making, right? So a 10% increase on taxes and all the money you earn over $75,000. It's a big leap. That's the first big one there. Now, if you look here too, 25 only goes to 153. If you look previously, the 22 went all the way up to 206. That's a big difference. Okay, so now it's 206 and now 153. And if you make over $153,000, this 28% bracket is now what you are in. All right, so again, we're seeing big increases across the board. But here's the biggest kicker. The biggest thing they changed was a 28% bracket, which used to be the 24, only goes to 233. Before it went to 394. All right, so those high earners out there, people who are, as a married couple, and this is married, right? FYI, married filing jointly. If you make 300 grand a year, you used to be in the 24% tax bracket. Well, now you're jumping to the 33% tax bracket. All right, so that's a bigger leap with a 15 to 25. That's a big leap there. But also this leap right here is big. Now we're in a 33% tax bracket going forward. So if you're in these categories, you might see a big increase in your taxes going forward if you fall within here. Okay, so just keep that in mind. And if we're getting close to retirement, right? This kind of retirement income might be close to here, or maybe you're just making good money today. Just be aware you might see a big decrease in what you're actually bringing home due to these tax increases going forward here. And those heavily getting affected, really, those who make, to me, over $150,000, get this 28% jump. But anyone who making over 233, you're going to get walloped. You're going from 24 to 33. It's a 9% increase. And if you're in the 12 right now, or that's the other big one, we're in 12% right now. And if you make $90,000 a year, now you go to the 25. That actually is the biggest increase of 13% increase on those top dollars getting taxed there. So this is what would happen, right? These cuts expire. Now, right now, they're working on stuff. And by the time you look at this video, maybe they already approved something through Congress to extend these cuts out going forward. But if you're in those income ranges, right, like 75 to 100K, and if you're over 233K, you can get majorly affected going forward with these tax increases. Now, if you subscribe to the channel below, if you have any questions, you can hit our line up. Our phone number is down below as well. We also have a booking link if you want to book a call with us and talk through what are the strategies around tax planning and what that looks like there. Definitely something we can talk to you about how you can save your money and put more in your 401k and all that stuff there, reduce your tax liabilities. But something we can go through together. All right, but enjoy the rest of your day here. Subscribe to the channel, like the video if you liked it, and we'll talk to you soon.